Hey folks, welcome to CFO Chat. As always, any corporate action happens, you have all the detail here. Safaricom has released sterling HY numbers. We are privileged to have the CFO, Dilip. Always a pleasure to sit down with you, man.
Thank you. Thank you very much for having me here.
Dilip, I must start by saying congratulations on the numbers. I just checked the markets. The share prices are open 10% up. And let's start from here, Dilip. When you look at the top line, in my own analysis, looking back historically, it looks like this is a set of results that definitively says all the overlays and the hangover we have from COVID-19 seems to be finally behind us, because previously it's been a bit up and down. This one looks quite resilient upwards. Do you share a similar assessment?
Okay, so let me start by saying that we are very happy to see the set of results that we have just released. And I was presenting, there was a slide that I presented. If you look at the ups and downs over the last 5 years, and then what you see now, you could almost say that we are beginning to see a positive trajectory. Yeah, you had COVID, and then pre-COVID, post-COVID, and of course the macroeconomic challenges, Russia, Ukraine war, all of that has some impact. Now, if you're asking me whether are we behind on all of this, no, I don't think we are behind, or and we start seeing that customers are going to spend a lot more money than they were doing before, because customer wallets are still stressed. But we did quite a bit of work over a long period of time, building capability, building new businesses, expanding our services that we offer to our customers, and that's showing up. Yeah, that's showing up in the key revenue streams that we have grown in this half year. You've seen that very strong M-Pesa performance. Of course, we had reintroduction of the charge, the M-Pesa to bank, bank to M-Pesa. That of course helped us. But remember, this is also in the context of we have reduced the prices by almost half. Yeah, but the volume, the customers found it so easy for them to use this channel. The volumes have grown so high, despite a reduction in prices, despite reduction in volume, we still have grown in that area. So 16.5%. Just outstanding performance from M-Pesa. Mobile data shaping up very well, 12.5% as you see. The usage is now 3.8 gigabits per customer per month. I still remember when I came in November 2020, we were about a gig per customer per month. So you almost like in 3 years time it has gone by 4 times. Yeah, and still a lot to cover in terms of the 4G devices. People are still using 2G devices. So very strong story on mobile data as well, and fixed shaping up very well. We still have a lot of work to do in the enterprise space. The home is really doing well with 30% growth year over year, quite commendable. And don't miss out messaging revenue. Yeah, yes. Sometimes because it's a small revenue, but we still have 20 million customers, active customers on a 30-day basis who use messaging. Yeah, and that has grown 6%, and which line was on a declining. Yeah, within M-Pesa, I just wanted to highlight, I think this also came up on all line items are growing except lending. Yeah, but we know why it is. What we are doing is that we want to broaden the base, make it affordable, so that more and more customers can use, and at an affordable price. That's why we did the price optimization in Fuliza last year by almost 50%. That's what is resulting into revenue decline. But if you exclude Fuliza, we are growing. We are growing over 20% in the rest of the lending businesses. So with merchant credit coming in, and and the buy now pay later, and potentially credit marketplace at some point in time, I think we're going to grow in the lending space as well.
Dilip, on the M-Pesa discussion, I think one of really the sweet spot in these numbers is the fact of the growth in the chargeable transactions, up by double digits, huge volumes you're looking at here. But the question I have for you is this: is this a one-off given the reinstatement of tariffs, or do you see yourselves being able to replicate this kind of growth in the chargeable transactions?
It's interesting that you asked this question, and I have to admit that this question comes up quite often in terms of when you see the chargeable transactions growth even in the last 2 to 3 years. My take on this is that it's fundamental to what you are trying to drive. Have more use cases for customers, allow them to use more services which allows them to do one more transactions. And that's what is driving. We have 30 to 33 million active customers, 30-day active M-Pesa customers. So one more transaction, one more services leads to this. Now, pre-COVID, 3 years back, we were about 8 to 10 transactions per customer per month. The question at that time was, are you going to grow from that level, right? So because of our past success, sometimes there is this feeling that, oh, are you guys going to grow? And there are questions that I have to face. Is financial services going to grow double digit in the future? Yes, but we have delivered. We have delivered consistently double digit growth. Our CAGR on M-Pesa financial services has been over 12%. Yeah, for 5 years more on. So it's just a testimony of the fact that we have more services, more opportunities for customers to use our services, and therefore one more transactions leading to the growth that we've seen. So yes, it is very much organic. To some extent, it got also positively impacted by the return to charging or reintroduction of the charges, but we believe that it's sustainable. So it's sustainable.
And M-Pesa now at 42% of the revenue, service revenue pie. Indicatively, do you have in your mind a threshold where you'll begin to say, perhaps we are bordering on concentration risk here?
No, that's a good question. If we are talking about concentration risk in the context of the type of business that we run, my take on this: don't look at M-Pesa as a 42. Yes, it is a 42% of service revenue, but within that, M-Pesa has also different set of business. As I was talking, I was giving update on our, say, international remittance business, just 2%. Our lending business is about 6% of M-Pesa. Yeah. So within M-Pesa also there are businesses that you need to look at. They have an opportunity to grow, right? So we cannot combine everything in financial services and say there is a concentration risk. We have to see that are we developing new areas of business, like for example, we had the merchant credit, which we didn't have before, right? Now, is there a concentration risk there? So you have to see concentration risk in the context of business and the solutions that you are providing. So to that extent, I don't see that it's a concentration risk. We are, it's growing. We are very happy about it. It's not that the other side has not grown. We have delivered on the core side, outside of FS also, a very good growth in this first half. So I don't believe that it's a concentration risk.
And now that you have full control of M-Pesa, how does that change, if at all it does, the strategic outlook for that business line?
So on M-Pesa, I think you referred to the M-Pesa holding company, the trust, which so basically it was a Kenyan company based out of Kenya, and it's that trust holds the money for all the customers of M-Pesa, right? So the ownership of this was with Vodafone, which you have brought it back. Now, everything is within Safaricom. So it allows you to have more visibility. It allows you to have more control because through trustees and board of trustees, this is now being run. So is it going to materially change the way we run? No, I don't think so. What will enable is for us to have more visibility about how the money that customers has in their wallet is safeguarded. So that's what it brings in. It's not necessarily anything commercial way it's going to help us. It's just to make sure that our primary objective is to make sure that money is secured, safe, that there is no way. But in any case, the money was lying here in the banks and the treasury bills, and it still remains here. It's just that management of that, there is an oversight and overview that Safaricom is now doing, which used to be done by Vodafone before.
Yes. Dilip, retiring the USD facility, bridge facility for the Ethiopian investment, I think was a very bold decision, considering the environment you're operating in. Maybe could you just walk us through the thinking around arriving at that as being the optimal solution, given the FX headwinds that are in the market?
No, that's a good question, Julian. And we were debating, what should we do? And typically, USD loan comes at a cheaper rate, but you run the risk of the depreciation, the currency risk. That's a big risk in any foreign denominated loans. As we have started seeing the depreciation and dollar becoming stronger and stronger, we were taking many initiatives, including trying to see, how can we minimize our foreign currency exposure, and we were looking for opportunities to make sure that we don't carry it for longer. Yeah, so we planned it and we executed, but it is very bold for us to be able to say we haven't crossed even 1 year from the time we did the syndication and then we repaid. So the payment period was for 5 years. But that was required, otherwise the exposure, the way you have seen the 22% depreciation in shilling, it would have costed us more. So we evaluated that and took a very bold step. I mean, beyond that also we are trying to do is more and more localization, buy more locally, don't pay don't pay in dollar. So there is a whole piece around how do you manage the foreign currency exposure. You may have noticed we have upgraded our guidance, but at the same time, we will also upgrade our capex outlook for the year, right? So that was also driven by the currency depreciation, that it is costing you more than what it was costing before. So you need to upgrade, or you need to spend more for the same things they are doing, although I think we've still optimized on that. So currency exposure, currency management, and making sure that we can minimize our exposure in this area has been a key focus area for our treasury function, and I must say they have done a very good job. And also looking at what we tried to do through the sustainability linked loan, you have seen that our announcement first time here.
15 billion, I think.
Yeah, 15 billion. Excellent response. We were looking for 15 billion, but we could have actually borrowed 30 billion. That was the demand that everybody. And the good part is that Safaricom is very much focused on ESG, has been there for forever, right? And that allowed us to see how can we leverage that and also optimize our interest cost, because if we hit those 3 KPIs that we agreed, which is one is on carbon emission reduction, inclusion and diversity, which is what we are on a great path, and also on digital inclusion, so the 4G devices, more and more affordable 4G devices in the hands of the customer. So we thought that this is in any case our DNA, ESG. So why not use this as an opportunity for us to also reduce our cost of interest, because the interest cost is lower for anything that you do on the green side. So banks have huge appetite in this, and I think we know for sure that this is something that we'll always be looking for in future whenever there is a need for funding. That was $120 million. That's what we repaid. That does give us breathing space in terms of keeping one more item in our overall fund, the forex exposure. Yeah. So remember, we have supplier who supplies. We import from them. So there isn't one big part of obligation, and then we have the debt that we take in foreign currency. So it's a substantial part of our. Actually, we are not necessarily big on foreign currency denominated loan before. So this is the first time we took. So I would say a large chunk of that has gone off. What we are left in the balance sheet, you will see that these are short term. We need for typical capex or capital payments, which is falling due. We draw a short term dollar loan, but we repay it as soon as the flow comes back, right? So therefore, we are very happy that we don't have anything in the long term debt, and that's not small amount that we repaid.
But still on the debt side, quite some heat on the finance cost side. I'd imagine this reflects really just the interest rate risk in the market. Maybe you can comment on that and what strategies you have ahead.
Yeah, that's right. Our interest cost has grown by almost 50% year over year. Yeah, mainly driven by the weighted average cost of interest. So our interest rates are normally fixed with the T-bill and then the margin, right, the spread. While we are trying to optimize, and we are able, because of our strong balance sheet, we always get a very good spread. But the T-bill is what has led us to this growth. I mean, the rate has grown almost by 30%, yeah, over a period of time if you compare that. And of course, we borrowed more money for funding Ethiopia and from funding our green initiatives that we have. That also, so there is a bit of a volume impact, but more importantly, it is the rate impact. Now, As I mentioned, I think sustainability linked loan was one of our key initiative to see where can we reduce our interest rates. Sitting down with the banks and see what more we can do in terms of refinancing and looking at a long term which is more beneficial for us. So we do it all the time as a part of treasury opportunity, but I must say that this is one of the key area of focus for us. It has never happened before in the history of Safaricom that the interest cost has grown up, and it's not because you have taken more loan. Yes, you have taken loan, but it's mostly driven by the rate of interest.
Yeah, absolutely. So speaking about Ethiopia, the guidance remains unchanged based on the presentation we've seen, and being 1 year into the commercialization of the operations in Ethiopia, I remember at the start of it, Safaricom did indicate that we expect within 4 years we'll be able to break even. Now with 3 years left, do you feel you're on course given the numbers that are coming out?
Yeah. In the guidance, yes, we did mention about Ethiopia guidance remaining same, and it's also coming from our confidence around what you can execute in future. So 4 years, two things we said. We said FY24 will be the peak losses, and then it slides down, and FY26, which is 2 years from now actually, is when we do a bit of break even. With all the commercial momentum that we see, despite all other macroeconomic challenges, we assessed, we evaluated, and we believe that we are on course to achieve that. So FY26, we do a bit of break even, and then the next 2 years is when we really scale up. We are already 2,000 plus base stations. You have seen the numbers. I mean, if you look at those charts, pretty much everything is doubling. If you see the March close number and then see the September numbers, they are in the right track. The price levels are low, and which of course puts pressure on the ARPU. But as we gain more and more customers, you will see that voice coming also improving the ARPU. But mobile data, we are doing very well. Mobile data, we are about 20% of revenue in Kenya, and we are 69% of revenue in mobile data in Ethiopia. But don't take that number as going forward number, that's how it's going to happen. But we are very pleased the way, and also ARPU is also quite good, about 180 shilling. We are about 240, give and take about 240 shilling in Kenya, and it's just 1 year operation. We are about 180 in Ethiopia in terms of mobile data ARPU, which is very, very encouraging.
I see. And M-Pesa 1.2 million active subscribers, are you within target, off target, or how is that trending?
No, we are within target. As Peter mentioned, we are in that building phase, and also Wim was also talking about that. We are in that building phase where all that we are focusing on getting more agents, getting more merchants, and allow more customer acquisition. So the good part is that the acquisition process is same. So any customer who comes in to be a GSM subscriber also becomes an M-Pesa customer, because we started pretty much, so I think that's also going well. In terms of customers, yes, we are on track, but in terms of activity, there is still a lot to be done. You have the customers, but what are they using it for? I think we also mentioned about if you have not noticed that transactions per customer on active base, it's 3. So it's not, we need to come a long way to be able to do this. So it's a huge task ahead. Activity, we need to increase more customers, more activities, but I think we're on the right path.
Okay. And how are operations in the Amhara region going? At the sites back on? The last conversation we had, I think there'd been a bit of a halt on that side. And do you feel that Safaricom will hit the target for the number of sites for 2023?
Yeah, so confirming to you that Amhara region is still under emergency. It has not changed, and which of course putting us in terms of a new rollout, and also the base stations that are not necessarily serving customers because there are restrictions on use of certain services there in Amhara region. Now, it's almost 20% of our business there. So 20% of business not getting the right traction. We are not necessarily very happy about it, but what can we do about it? Then we are trying to make sure that the rest of the areas can pick up. So we are reallocating resources. We are also looking at Tigray region, which was which also went through certain disturbances at quite some time, but it's much peaceful now. So things which were not part of the plan in going to Tigray is also something that we are currently accelerating. So it's just a readjustment of where you want to accelerate, maybe slow down on Amhara, but accelerate in some of the areas where you see green shoots. So overall, September, the numbers that we have delivered on track, and we also are very much on track to deliver our FY24 numbers, whether it is our population coverage or whether it is the number of sites that we have delivered.
Okay. Dilip, we are running really short of time because of your next engagement, but I was really impressed by the growth in the merchant numbers, considering the conversation which has dominated this economy that consumers are ditching mobile money for one reason or the other, whether it's cost, whether it's tax visibility. The merchant numbers are up significantly. And sometimes, how do you reconcile these two things?
See, convenience drives adoption, right? If you make it convenient, customers will always come and do what they have to do, right? So for us, I think as an operator, what you can do is allowing that convenience, and merchant acquisition has been a great story. I mean, if you remember, I think 3-4 years back, this number was just about 100,000 plus. It was no, I think it was 150,000. Now we are close to 700,000. Yeah. So our target is to go to 1 million. And merchants are growing, transactions are growing. Yes, there are some what you could say, some, in the market there are quite a few elements that's going on in terms of the merchants, the news that you hear. But so far, I think we have been successful because it's convenient and it's useful for the customers. So, what about future? We still have our target to hit that 1 million magic mark on merchants. We are on course, and hopefully the other noises go down by that time.
All right. So that aspect never really bothers you in terms of are people really just abandoning these platforms, or what's happening?
No, you can't take note of what's happening in the market, right? But that's a very normal and natural reaction to what happens. So again, I'll come back to what is in your control and what is not in your control. Yeah. What is in your control is the propositions, services that you offer. That's what you drive. Now, customer has always have a choice. Remember that. Always have a choice. If they have a choice of not doing what they do today, they will do something different. But for us is make sure that you do the right job. You make sure that the propositions are right. Make sure that it's convenient for the customers and it is also affordable. That's what we have been driving. So we stay on that course.
Dilip, in August, the central bank did approve the raising of M-Pesa transaction limits to 500,000. I'm curious. I know it's a bit of early days, but how is this showing up in the numbers for M-Pesa?
No, it's a very good move, especially for the small and medium business. To allow them to transact, because those restriction was also putting them into a situation where they can't transact M-Pesa. I think that's it's early days, as you rightly said, but it is. We believe that's the right step. It's a step in the right direction. It's going to enable M-Pesa for the small and medium enterprise in a big way. And yeah, numbers are still not available. I'm sure as we come to the end of this year, we'll be able to tell you a little bit more about it, but it's very encouraging.
Okay, let's close this conversation, Dilip. The Safaricom share price year to date is down about, well, before this market opened today, was down about 48% by my math. And I'm just curious, when you sit as management, does this concern you? Does it really top your priority in terms of what could be happening?
Yeah. So, as a management, you can't not take note of the share price. Yeah. Are you happy about it? Of course not. Now, what can you do about it? Yeah. So there is something again. I like to repeat what I said before. We should know what are the reasons for that. Is it coming from performance? Is it coming from performance anxiety, or it is coming from other areas? For us to look at that and understand, get the investor sentiment, get the analyst sentiment of what is driving down the share price. I'm sure you know it very well that there is a concern around macroeconomic environment. It's just not these bourses, I think, not just for Kenya, I think in some other countries as well, as you are observing. Then you try to see what are the things that we can do. I think on performance side is what is definitely within the control of management, and also tell the story to the investors, analysts, to give them the confidence. Are we on the right track? Are you delivering what you are promising? So that's, I think, is a bigger concern and bigger area of focus. So that's what we focus on as a management on a day-to-day basis, because you can't be seeing every day the share prices start thinking about, oh, what's going on. We are worried because shareholders are the one who have put in money. They have the confidence in our management. They have the confidence in our ability to execute our plan, and we need to make sure that we meet their expectations. So management is trying to do what management should be doing, and of course, and try and tell the story in a way that we deliver performance. And as you know, it's not necessarily coming out of performance. There is also another conversation around, are we on track in Ethiopia? Will we deliver? It's more coming out of anxiety of not seeing what would happen in future. And greenfield of this size in telecom has not happened. You know, if you look at, you don't see this kind of operation. So therefore, typically you don't have that view about what's going to happen in 3 years from now, what's going to happen 5 years from now. Management is saying, but do you have the confidence? I think it's in our gift to execute Ethiopia in a way that key milestones are achieved and tell our investors that we are on track, and that's what we are doing. So my thing, are you worried? Of course we are not happy about it. Are you doing the right thing? As a management, we are trying to do the right thing to make sure that which is in our control, we deliver.